short run through the precious metals. This is gold on the US dollar weekly chart. Last time I did a YouTube over here, dollar up, precious metals and euro down was the call, and that was the euro. We also were having a look at a number of other charts of the precious metals nature, both silver and gold as well. And this view hasn't changed for me. Back to where we are, I'd suggested in that previous clip, if you go and have a look at it, that this grind line over here would be broken to the downside rather than us breaking to new highs on gold. We had a key level of significance at 1350 that's just run and resisted. People who like to call reversals would have been very tempted to say left shoulder ahead and right shoulder over here. Steep grind line. You'll learn about that if you learn how to trade and play defense. In other words, it's not what you make, it's what you keep. Webinar that we'll be doing on July the 3rd. Register on the marketsniper.com website. But the key point is, with a grind line like that, you'll learn about value of grind lines. This is showing steep ascending buyers coming under the market, but no great power and strength. What tends to happen is that they punch themselves out. It's a bit of what I call the George Foreman to Muhammad Ali. They do all the chasing and they do all the blows, and eventually they punch themselves out. And then there needs to be this relief because it's not made any real headway on the top line against the selling or the capping of metals. And what eventually ends up happening is there's exhaustion, and then you get punched over. And this has happened. If we take it down to the daily, because this is on the weekly time frame, you may remember this descending triangle as well. We've not fully ever really gone into, and this is what people don't realize, I keep repeating, and I'm hoping that some of it sticks, especially for newbies, so that you don't have to experience this degree of frustration. But you don't go from a melt up high bull market to overbought, horrendously overbought, to this descending triangle and immediately back to bull market once you break. Yes, you stop falling, the rate of falling. Yes, everyone would have called bull here, only for it to come 2/3, 60+% all the way back and then grinding. You don't go from that extreme bull market that we had in precious metals from the Brown's bottom when he unloaded all of Britain's gold for the loser that he is, the criminal that he is, all the way down in the 250 marks, all the way straight into another bull market. That was a really hyperbolic move, and when it topped, then it fell, and then you churn for a while. It's not simple, it's not binary. You don't go bull bear. And what's essentially happened is you've stopped going unequivocally down, but you're not going unequivocally up. But the problem is people aren't patient, and they don't remember their recent past, and they don't remember and realize that the macro chart and the macro trend is the predominant theme. That is the horse latitudes in sailing. That tells you where the wind blows. And yes, you can get a gust in this direction and a gust in that direction, but in the long run, you're going to get most of your power coming from one direction. And this has been an end of trend pullback. So it's just long-term, serious pullback. This top out was in 2011, guys. We're 2018 today. That's some 7 years on. 7 years on, and there's been more heartache and pain than there's been joy. And as I said already, everyone would have been shrieking return to bull at this high over here, as if it was a V-end recovery, only for this churn to come in. When was that high point? That was in 16. And what's happened since? You're lower than you were at that high point in 2016. So this grind line has broken. It's not as simple as that about going back to bull. And in the same way, the bear market started to slow down and stall down here. The bull market has been grinding and weak over here and can reassert to the downside. That's not to say I'm bearish or I'm bullish. It's just to say it isn't an easy trend trade. You can see this if I take it down to the daily. Lots of congestion, lots of tapping on this door. Sell-off tests the key level, rally, smashes it, return move, and now you're selling off. It's classic key level of significance trade, and it has now fallen below all these relative lows that were captured at the wick level on the weekly chart. So be cautious, the gold bulls, be cautious. And by the way, there's your return move, a bit of a channel grind up under even the return move. As I say, you'll learn more about how to trade defense in markets that are no longer clearly bullish, and on top of that, how to hold that which you keep in our free webinar, which will be July the 3rd at 1900 British summertime. Go to the website to register. That's your update on gold. Still not strong, still can't be trusted. Dollar is stronger, and gold is invariably measured against the dollar. That does not mean, in a reset sniper language, that when the great reset comes, I am not a potential fan of gold. I could well be. That moment has just not come yet, technically speaking, where gold has shown its predominant strength and return to bull. So keep an eye out, play it safe, and we'll talk to you all soon again. Enjoy your evening.